Welcome back to Explain the Charts, everyone. Today, July 22nd, 2025, we are taking an in-depth look at the AUDUSD currency pair, analyzing both recent news and the raw chart data. The current market sentiment, influenced heavily by recent economic data from Australia, suggests a bearish bias for the Aussie dollar. We're seeing the AUDUSD trading around 0.65512, showing a slight decrease in the last 24 hours. This aligns with reports of a dovish Reserve Bank of Australia and a concerning rise in the Australian jobless rate. Let's dive into the fundamental news driving these movements. FX Street reports AUDUSD is holding near 0.6500 following dovish RBA minutes, reinforcing the bearish outlook. Perhaps the most impactful news comes from Reuters, highlighting Australia's jobless rate hitting a 3.5-year high, which ramps up expectations for RBA easing in August. Economies.com further confirms this sentiment, noting that the AUDUSD price suffered sharp losses, breaking the key support at 0.6485, indicating a dominant bearish correctional wave. However, Yahoo Finance briefly mentioned some gains after an unexpected RBA move, suggesting that volatility has been present around RBA decisions, creating opportunities for two-sided action. Action Forex also points out that while AUDUSD notably rebounded today, it remains below the significant 0.6589 resistance level, maintaining a neutral intraday bias with potential for more consolidations. Now, let's turn our attention to the charts, starting with the daily time frame to grasp the broader trend. Over the past year, the AUDUSD has generally been trading within a wider range, albeit with a noticeable downward bias since late September 2024. We saw highs approaching 0.6937 in September 2024, followed by significant declines in October and November. The market has generally struggled to sustain moves above the 0.66 to 0.67 region, which has acted as a strong resistance zone. Looking at the last 90 days, the WISE currency converter noted a high of 0.6594 and a low of 0.6364, with an average rate around 0.6479, confirming this range-bound, yet generally weaker trend. Zooming into the recent daily action, let's focus on the period from early July 2025. We can see a high near 0.6594 on July 10, 2025, which lines up perfectly with the 0.6589 resistance mentioned earlier in the news. Following this peak, the pair experienced a sharp drop, hitting a significant low of 0.64075 on July 17, 2025. This substantial move can be directly correlated with the dovish RBA minutes and the disappointing jobless rate figures. The market then saw a bounce back, with the latest available daily candle for July 21, 2025, closing at 0.65271, suggesting some short-term recovery, but still well below that critical 0.6589 resistance. This recent price action confirms the bearish pressure following the latest economic news, pushing the pair below previous support levels. Moving to the 1-hour chart, we can examine the finer details of the recent price movements, though it's important to note this data set concludes on July 7, 2025. Despite this, it still offers valuable insights into intraday volatility and trading patterns leading up to major news. During this period, we observed several attempts to push higher, particularly around the 0.657 to 0.658 level, which consistently acted as a ceiling. Each rally was met with selling pressure, indicating a lack of sustained bullish momentum in the short term. The hourly candles show quick reversals after hitting minor highs, reflecting the cautious market sentiment. Even before the major drop observed on the daily chart, this hourly view reveals a struggle for AUDUSD to maintain any upward trajectory beyond fleeting rallies. For the most immediate insights into market dynamics, we now turn to the 15-minute chart, which provides data up to the close of July 21, 2025. This timeframe captures the nuanced reactions and recovery following the significant drop on July 17. After hitting the low of 0.64075, the 15-minute chart clearly illustrates a gradual but consistent bounce. We can identify immediate resistance levels forming around 0.6500 initially, which later turned into a consolidation range. The consistent higher lows and higher highs from July 18th into July 21st suggest that dip buyers stepped in. This short-term bullish momentum brought the price back up to 0.65271 by the end of July 21st, bridging the gap towards the current live trading price of 0.65512 mentioned in the news, indicating a potentially stronger open for today. Synthesizing our analysis, let's discuss reasons to be bullish or bearish on AUDUSD. On the bearish side, the dovish RBA and the multi-year high jobless rate are significant fundamental headwinds for the Aussie dollar. The break of the 0.6485 support level is a technical red flag, suggesting further downside potential towards the 0.640 or even 0.635 to 0.630 region, especially if US dollar strength persists. This short to medium-term outlook remains challenging for AUDUSD, with market participants anticipating further easing by the RBA. Conversely, for a bullish argument, the recent bounce from the July 17th low of 0.64075 shows underlying demand at lower price levels. If the 0.6500 psychological level holds as support, and if incoming U.S. economic data shows unexpected weakness, we could see a short-term relief rally. Long-term bullish reversal would require a fundamental shift in the RBA's stance or significant improvements in Australian economic indicators. Key price levels to watch are the recent low of 0.64075 acting as critical support, the former support at 0.6485, which now becomes a significant resistance, the psychological 0.6500 level, and the strong resistance zone around 0.6589. To recap our important price levels, keep a close eye on 0.64075 as a crucial support level. Should price break below this, further declines are highly likely towards 0.635, perhaps with a 65% likelihood if current bearish sentiment persists and RBA eases. On the upside, 0.6485, once a support, is now a strong resistance level to overcome. Above that, the 0.6500 psychological mark and the more significant resistance at 0.6589 will be key hurdles. A sustained break above 0.6589, reinforcing a bullish reversal, would need strong economic data from Australia or a hawkish shift from the RBA, which currently has about a 30% likelihood in the short term. In the coming days and weeks, look for upcoming RBA statements for any shifts in monetary policy language and the next round of Australian employment figures. Also, monitor the U.S. Federal Reserve's outlook and broader global risk sentiment, as these will significantly influence USD strength. Trade carefully, manage your risk, and stay informed. Thank you for joining us on Explain the Charts, and we'll see you in the next analysis.